Hello there, Maverick Currencies traders. This is Rob Reinhold, and it is September 20th, and today was a Fed day. So let's jump into it. What we're going to cover today is what happened today. We did not see a lot of movement in currencies, but we saw some big movements in stocks. We're going to take a look at the market. We're going to take a look at what's coming up in the schedule over the next 24 hours, which we have 3 more central banks coming up in the next 24 hours. So there should be some better trading opportunities ahead, and we're always looking for trading setups.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Let's take a look at the market analysis here. This is where we were last night. So last night we did not expect there to be a lot of movement going into the Fed meeting. And we said, hey, you want to wait until the Fed meeting is over and the press conference is over before you really start to take a look at some trades. The only thing that was showing some momentum was Japanese yen and Swiss franc weakness. So let's go on to what actually happened today. We got some CPI news out of the UK, and for the first time in probably a year and a half, it was less than expected. The UK has been fighting inflation really badly over the last 2 years, and for the most part, has been kicking the Bank of England's butt. All of a sudden now we're starting to see it moderate for the first time. We do hear from Bank of England tomorrow morning, and we'll see if they back off of their interest rate projections. We then heard from the FOMC today. We met live as a firm, and we got no rate hike as expected. However, what we did get, and especially during the press conference, was when Powell was speaking, he was talking about their forward projections. Their forward projections were much more hawkish than they were last time. Basically, the Fed said we think we're going to have to cut rates about a couple times in 2025. Well, they kind of took that off the table. And they also ratcheted up US GDP growth above expectations. So here we have a Fed who has said, okay, we think we've done enough. We're going to pause here for a little bit. But when you take a look at the future, it still clearly shows that they're more worried about future inflation than the market is. And the market really didn't love it. So what we saw today in currencies was not much. Take a look at these numbers. These numbers are tiny, especially on a Fed day. Now, they're not saying that there wasn't volatility today. We'll take a look at some charts, and we'll see how much volatility there was for a brief moment. But at the end of the day, there was really just no movement. The pound was the only thing that moved a decent amount from that negative CPI report, but everything else was barely up and barely down. Now, that being said, look at the moves outside of the FX market. We had the S&P down 1%. We had the NASDAQ down 1.5%. We had crypto down 1%. We had oil down 1.5%. So some asset classes did sell off. Now, the other thing we saw was interest rates actually came lower. Interest rates backed off. So I wanted to talk about this today because I think that we saw this big, nasty red candle. And we're going to take a look at the chart. Here's the problem. Nothing else moved today other than equities and oil. That's all that moved. Everything else was actually very well tamed. And frankly, some of the things were showing more of a bullish stance. If we take a look at cryptos, they were down, but not big. You would expect a day like today, you expect these all to be down as much as Litecoin was. Bitcoin was hardly down. So let's take a look at where we are here. And I really want to take a look at this chart on the S&P. For the most part, we've had completely sideways action. We're in this range. We've got this little midpoint here, and we've been bouncing around, come up, we break out, we come down, we fall apart. We were right at this midpoint of this range. This red candle, yes, looks nasty. And look, it might be the start of a downtrend. We don't know that at all. But as I said, when you take a look at bonds, take a look at the bond chart, it's not really screaming that there's a huge breakdown happening in the market. You take a look at some of the other safe haven assets like the yen and Swiss franc, they're not spiking. They're actually trending down a little bit. All the things that usually happen when a stock market crashes are not happening, which tells me that this red candle is likely to be erased. Now, again, this is just my opinion. The market does not have to do what I think it's going to do, but I really don't think we're going to see a movement outside of these areas for potentially the next couple weeks or the next couple months. I think this market is sideways. And take a look at these moving averages. They're just trending sideways. So look, we'll have to wait and see. I'll always adjust my outlook, but this red candle looks nasty. I know it does, but we had another red candle that looked really nasty back here in August, and you can see it was basically erased the next 2 to 3 days. I think we're going to see the same thing. Ultimately, I don't think there's a lot of movement going on really anywhere in the markets. Let's take a look at what is on the schedule. So we do have GDP tonight out of New Zealand. If you're trading the Kiwi, definitely be watching that. 2 central banks tomorrow. We got the SNB. They only announce 4 times a year. Most of the time you can sleep through it. They are expected to raise rates by 25 basis points. So that is probably priced into the market. We'll have to see what happens there. Then we hear from the Bank of England. That's also expected to raise by a quarter point. I actually think the Bank of England is going to be more important than the Swiss National Bank because of that weaker than expected CPI print. Does the Bank of England back off of that? And then we've got the Bank of Japan. So as you can see here, we've got lots of stuff happening here. And frankly, I think the Bank of Japan is most likely going to be the biggest one. They're expected to stay ultra dovish. If there's no change on that, and the market can recover a little bit, I really like the yen as a short after that monetary policy statement late on Thursday night, early Friday morning. After that, we don't have a ton for the rest of the week. We do have some manufacturing out of Europe, but that's about it. So let's go in and take a look at some of the currencies that are actually making some movements. For the most part, we're not seeing much movement. I want to take a look at the things that actually did move a little bit today. And first up, I want to take a look at the pound. So here we have the pound. It's been steadily trending down here over the last couple of days. And here we have the daily chart. You can see this is a one-way trade. It is simply going lower and lower and lower. Now, since we have the Bank of England report, I think you do have to be cautious here over the next 12 to 18 hours. But boy, on any bounce, I would love to be a seller of pound. I'd love to be a seller of pound here. So I do like the pound on the short side. As you can see, it's breaking below the support line. Next support is going to be down here in the 155, 156. This is on the pound basket, equally weighted against all the other 7 currencies. We'll take a look at the pound against some individual currencies here in just a second. The other one I want to take a look at is Swiss franc. Swiss franc has been super hot lately. As you can see, huge uptrend here. But we have the potential to backtrack all the way down to this support line if this next one is broken. So I'm looking at these key levels here on Swiss franc on a daily chart. And we are reaching this area of support, so I don't think it's ready to be sold yet. If we bounce off this level, maybe I'll take a look at selling that rally. We're going to get right up to this point. But as you can see here, the levels are pretty clear on Swiss franc. So I don't love it as a short right here, right now, but a breakdown below this support line on the basket, I think it is ready to go. And let's stick with the European currencies because they're frankly the only things that really move today. Here we have the euro. It's also been super strong for most of the year. As you can see, we're starting to see some negative trending here happening in the euro. We got a little rally. It failed spectacularly. The big question is it going to break down below this last low? I think the trend is saying yes, it is. We've got moving averages headed down, SARS headed down, and we've got RSI pretty much flat heading down as well. So these are really the only things that weakened here over the last 24 hours. If we take a look at the yen also looks weak here on a daily chart, 4-hour chart, saying weak as well here. So those are the things I'd like short. Here's the problem. I don't see anything that I like on the long side. If we take a look at the dollar was breaking down here very short term right into the announcement. We broke down and then we pop back up. You can see here, the dollar really didn't do anything. So the dollar was like one of the best performing currencies today. It hardly went up. And frankly, it just isn't all that exciting. So I'm very clear on what I want to go short, not so clear on what I want to go long on. So let's take a look and see all the changes that happened over the last 24 hours. The European currencies are really the only ones that moved here. So we had the pound go from 0 to -2, had the euro slip a little bit, and we had the Swiss franc moderate. Yen is still weak, pound is still weak. Now, I like both of these as shorts, and let me tell you when I like them as shorts. If there is a bounce in the market tomorrow where this negative move in stocks gets erased, I like yen short the best. They are going into a Bank of Japan report that might dull the volatility a little bit. If the market keeps going down tomorrow, especially after the Bank of England statement, I like the pound short. Here's the problem. I don't like anything long. So if I'm going to pair them up against something, we've got Kiwi, CAD, and Aussie. I don't like any cryptos here at the moment. So I think this is what you're stuck with. You're stuck with Kiwi, CAD, and Aussie. They're not great, but they're the strongest versus yen and pound. So let's take a look at some of those currency crosses. The first thing I want to do is I want to determine which is the strongest between Kiwi, CAD, and Aussie. So what I do is I will simply pair them up against each other. So let me take a look at Kiwi, CAD. Which one is stronger? Kiwi or CAD? And you can see the Kiwi CAD is going lower, which tells me that the Kiwi has been weaker than the CAD. So we're going to throw away the Kiwi here, and let's go take a look at Aussie CAD. And you can see the Aussie has also been dropping a little bit against the CAD. So that tells us that the CAD is actually slightly stronger than the other two over the last couple of weeks. Now let's do the same thing. We liked yen and pound short. So let's pair up pound yen. And we can see here that over the last couple of weeks, we've seen mostly trending down with pound yen, which means that the pound is shorter. So that tells us that the currency cross is pound CAD. We're looking to pair up the strongest versus the weakest, and here we are. And this chart looks pretty dang good here on a 4-hour chart. The thing I like is we are getting a base here. We're simply falling, putting in some bases, and then we fall again, we put in some bases. The bottom of this base is 166. I think that's where you want to look, and that's really close at the moment. So I think you can look to get short here. Remember, there is a Bank of England report, so if you don't want to mess with that, I highly recommend you wait till after. But this is the currency cross to take a look at going into that event. I'm not going to trade it before the event. I think before events, there's typically not a lot of movement, and then you get this big explosive move in volatility. I'd rather sit out the next 12 hours of nothing and get in after the event when there's some volatility happening. So I don't think there's any good trade at all here until the Bank of England report comes out tomorrow. Let's wrap this up. We have the Swiss and English rate statements tonight or early in the morning, and then we've got the BOJ tomorrow night. These are the currencies I think you want to be looking at. I like yen short if the market rallies. I like the pound short if the market continues to stay weak. And what do I like long? Nothing. But I'm going to have to find something that at least doesn't look like garbage, which means it's the best of the worst. That's how we pair up relative strength and weakness here at Maverick. Thanks for joining me. Goodbye, everyone.